What's up, guys? It's Pac back with another market review of May 3rd, 2024, NFP day. So this should be a fun one. Go ahead and hit that like and subscribe button because, again, we're doing these market reviews every single day for the month of May. So show your support there. But let's get right into it. All right, sweet. So here we are, right at market open. These blue circles here, this is going to be, of course, our 1 minute structure that we have. And the pink circles here, of course, are going to be our 12-minute structure. So as we can see, we're quite far above our last 12-minute zone, which ends up being all the way down here. And I'm going to change that to a gray box. And we're currently tracking our 1 minute structure. This is 1 minute before market open. So when we have this push up, especially on NFP day and some other major news days, a lot of the times what occurs is two different things. One, we're either going to get something like this and then a push right back through, and then we'll just keep climbing. Or, I guess it's one of three things. Or you get this here and then it fails, and then we just come all the way down to data lows. And then the final option, and it's very easy to tell, is we come up, we trade up, we sweep everything out, and then we just end up giving ourselves a range. Especially being on Friday, I was talking to a lot of people that I was leaning towards either us pushing higher or just ranging, especially with where we were at on the daily time frame. That was just kind of what I was leaning towards. So right here, right at open, we can see that we have swept out the high here. We didn't close it. We swept it out. So right here on open, if we do get a valid high to occur, which means that if we close below this bullish candle, we'll at least come test the bottom of the range that forms, which ends up being this red candle here. Now you might ask, Pac, what's this black line for? This is the 12-minute imbalance. And a lot of times it just taps into that imbalance, sweeps everything out, and then that's when it'll go higher. So I always make sure I mark that out on the 12-minute. Sometimes it comes a little deeper and takes this one, but it doesn't have to. I'm looking for one of these 2 points to get taken to have continuation. But right now we just have this low and this high on the 1 minute. So here we go. So open, not too much happens. Okay, awesome. So right when we get this, what are we expecting? We're expecting a price model 2, which what's price model 2? It's when it comes up to the high and we wick it. We know that we're going to trade down. We know that the next move is down, at least to the bottom of the range. Sometimes it means we sweep the bottom of the range, but at least to the bottom of the range first, okay? So here we go, next candle. We're expecting trading down. There we go. We tap into the bottom of the range, and we swept everything out in the bottom of our range. Now what this tells me is that price most likely wants to come retest the top of the range, which would be into these wicks. And it looks like, yeah, there you go. You get tested right into the wicks. So why would I be bullish in this area? Well, overall structure is bullish. We were at the bottom of our range. And now we for sure have a valid low occur. So this is just a retracement. So that means most likely it's coming up here. So yeah, you could have waited to get involved up here. You could have gotten involved in the bottom of the range, depending on what your entry method. But this is just the ideals that you should follow. We swept something and we tapped into our area. We swept something, we tapped into our zone. And we push right up. We sweep. So again, if we were to get a valid high here, what would we expect? We would expect it to trade back down to the top of the range. So if we got to close underneath this candle, we'd expect another trade to the back of the range. But until then, we're still bullish, expecting this to go higher. Good to go. And now we do get a close of structure, right? We have continued structure to the upside here. So that gives us a brand new zone. We get a brand new zone here, right? From this low, or from that high to this low. And this is our new structure. This is our new structure. So we're just bullish until when a valid high occurs in the market. We're bullish until a valid high on this time frame occurs in the market. Boom. No valid high. It's still expecting prices to trade higher until that valid high occurs. Swept it out. So what happens when we sweep out the candle that it's trying to validate? A lot of the times we come test the highs, because what is this? This is just an idiot box, a range on a lower time frame. There you go. Trades right up to the highs. Closes that. Again, this isn't a zone. Why is this not a zone? Because we did not close below this candle, so it's not a zone. Again, we're still expecting what? Bullishness until when a valid high occurs. And we get not yet. It has not created a valid high there. Let me show you that it closed right on the wick there. Closed right on the wick there. So that is not a closure. And then you finally get that close right here after news. So look, if we're paying attention and we know that this was the candle that we needed to validate, we would know that it did not validate, so we would not have tried to enter shorts until this candle closes, protecting ourselves from this news it looks like occurred at 10 a.m. So now that this valid high has occurred, what are we going to expect? We're going to expect to trade into our previous zone. Okay? Most of the times that means at least 50%. What I see is I see all this non-structure here. So a lot of times we come take that out and tap into the origin. And again, remember this black line, what I'm expecting. I'm still expecting that price comes and takes that at some point, because that's a tap into the 12-minute imbalance. Now, I don't use imbalances to trade, but I'd use them as the wick right before the imbalance. I use it as the liquidity point. I'm not really specifically focused on the imbalance. I'm more focused on the liquidity point, which would be that low right there. And so what do? We trade right down into 50%. It delivers a 1-to-1. So if you're a person that takes those 1-to-1s off 50% of your zone, congratulations. I'm still expecting, with this failure, I'm still expecting this to potentially trade down lower. Boom. You see that failure there? I know y'all see that failure. Right here. See how it doesn't close? The candle's trying to validate. Remember what I talked about right here? It's the same thing, but to the downside. So we'd expect this low to get taken. Just like that. Taken just like that. And remember, all these lows, they're not structured. We're expecting them to get taken. Still no valid low. Still hasn't formed the valid low. Still hasn't formed the valid low. So guess what? When there's no valid low, even with our zone, should we be longing? Nope. No valid low. We're trying to validate this new candle here. Try to validate this candle here. It swept out most of this stuff, right? Y'all see that? We've now swept out pretty much all this non-structure. All this liquidity here. You know, this one and this one, and potentially even trying to go for that one there. As long as there's no valid low, which now we're trying to validate this candle, then price will continue trading lower. Okay, sweet. So we have a valid low. We have a valid low. So what's the expectation here? Expectation is that we need to at least go take something. The expectation is that we should have continuation. The expectation is, put it on the drawings, that price is going to trade back up in this direction. Now keep in mind that this is a news day, and that a lot of the times going to your back testing, this point gets taken. Even though this valid low has occurred, a lot of the times these are just swings on lower time frames. So if we drop down to like the 5-second chart, here you'll see that we have not actually shifted structure on the 5-second. And I'll show you, because I'll show you our 5-second swings. This is a high on a, or a low, a high, okay? A low, a high. We close below, so we have a low, And then this does not become a high because it does not deliver here. So this is not protected. So our protected high is actually here on the 5 second. So if we know our protected high is there on the 5 second, we didn't shift structure on the 5 second on the lower time frame, we can expect that either this is going to get wicked out or we're going to hold from here and we're going to continue trading down in that direction. So let's go back to the 1 minute. It essentially is like a fake one, essentially a fake candle structure shift. And that's exactly what we got. And it looks like target was just received there. And sweet. There you go. That target that we talked about right at open, it's been taken. It's been taken. So now at this point, we're not getting a closure below here. It's only 1 wick. I need a second wick to show me. We don't have a valid low here yet because the candle we're trying to validate currently is this one here. Let me put that high there. Okay, sweet. So there's a validation of a low and there's a wick out. So what does that tell us? Again, price model or price expectation 2. We have a push up, a push down with a wick and then a close. So this should come back to at least origin. It should come back to at least origin. Now we are still bullish on this time frame. We are still bullish on this time frame. So what does that tell us? We have an overall expectation of what? Continuation. We have an overall expectation of continuation. This is our origin, by the way. We have an overall expectation of continuation. So we should be looking for bullishness to go into these areas, And if we fail, if we decided to go up here and fail, what does that tell us? A failure equals a state of consolidation. So we just get something like that. So let's see what happens. Remember, nothing in here is structure. Nothing in here is structure. We have a high here, but nothing in here is structure. And lo and behold, what happens? It trades right back into the range. So if I was looking for a long here, where do you think I would long? Well, I'd long when price trades back into this valid low. After it validates it, it comes back into around 50%. That's when you'd look for your longs. That's when you'd look for your longs. So once we bounce here, once we tap here, what are we looking for? We're either looking for some sort of push through to continue, or we're looking for a valid high to occur to come back to potentially the bottom of the range. So you get a valid high occurs right there. So now what are we looking for? We're looking for price to trade back to the bottom of the range. Why? Because now it's a range. Because it failed to do its job. It's failed to do its job. Okay? It's failed to do its job. Trade back down to the bottom of the range. If we get a valid, low in this area, which right now would occur here, I would anticipate it to trade back up to the top. So now we're trying to validate this candle here. Let me get rid of this box. Boom, there's validation. So now what can I do is I can long this Y, expectations of the bottom of the range, put my stops at the low, back up to the top. Now that's a 40 point range there, 40.1 to 1. Now you can take this trade. You can look for a refinement or whatever your entries are on lower time frames. Whatever your entries are on lower time frames. And let's see what occurs. Let's see if we get stopped out on this one. Does everyone remember? I don't remember. Oh, look at that. Right back up to the top of the range without stopping us out. Now, how could we refine this and make this a better entry? Well, we know that this candle here represents the bottom of our range, and we'll even drag it out to this low just so that it's a better visualization for you guys. we know that this represents the bottom of the range. Now, if we're looking in the bottom of our range, where's the prominent liquidity point? The prominent liquidity point is clearly this low. So if you just wait for that to get taken, and then you wait for the high to get another low to get validated here in this purple zone, well, does that not make, don't we get a significantly better RR? It's not 1-to-1, but it's a 1 to almost 4, something a little bit better. And if I wanted to refine that even more, I could use this new validated low within here, and then I could put my stop there. So now I have a 4-to-1. That's how you can refine within. But we're all following the same logic. Bottom of the range, top of the range. With an overall bias that we're bullish, we've taken the targets that we're looking for. We've formed 2 wicks. I would expect this to go over this right here. Why? Because the 2 wicks at the target are telling me that this imbalance, if that's what you're using, is holding. That it's holding. Okay? That this range is holding. And we have an overall structure of bullish. And when we have an overall structure of bullish, the first expectation before anything happens is that we are going to continue that even after a state of range. So we're going to expect these highs to get taken. And again, why would we expect the highs to get taken? Well, it's also the prominent liquidity point in the top of our range. It's the prominent liquidity point in the top of our range. If you can remember back to video 6, when I talk about ranges, once we close out the failure high or the failure low, what's the expectation? The expectation is that we should grind up to the top. We shouldn't have to revisit what? We shouldn't have to revisit the low of the range. We should just continue in an upward manner. Why? Because internal structure, order flow has shifted back to bullish. Okay, it's no longer in a state of range. So that's what we'd be looking for. Swept something out. I would expect here that most likely we get a push back to the upside because we just swept something. There's an imbalance here. This is the same thing. This sweep here is the same thing as this sweep here. And if you can understand that fractally, then you're going to be golden. But it's the same exact thing. So what are we expecting? We're expecting it to push. It's the same exact thing. And if you need to wait for a validated low, you got your validated low here. So then you'd expect these highs to get smoked. Boom. There you go. It even gives you a trade right back in. But you're going to say, Pac, we're at the top of the range. I'm scared. You have to understand the internal shift that occurred here. The internal shift occurred here, bullish. Our overall structure is bullish. So we should always be expectation of what? Continuation. Continuation is always the expectation. Continuation is always the expectation until you're proven otherwise. Until you're proven otherwise. So again, this is not structure in here. Why? We just have a protected low here, and our last high is there. We're still in a range. Now, this job of this low was to put in a new high. The job of this low, once it closed here, was to put in a new high. This job of this low was just to close this high, okay, fractally. So that means on a fractal standpoint, we do have a swing here. You have to understand why. Go back and listen to that a few times if you're confused. We do have a swing here. We do have a swing here, fractally. So if this, it did its job to take this high, but if it fails to take this high, then you can expect a new state of range just in this area and possibly even dip down deeper into this, last swing that occurred there. Okay? But we're still have the overall expectation of what? Taking that high. Okay. And we validate a low. We validate a low. We're about at 50% of this previous little fractal swing. And I know that y'all are going to ask a lot of questions about that, but I'm just saying, if you can learn why, and just go back through all the videos, go look at price, back test. If you can learn why this is an important swing, you're going to be way better off. So I would probably expect some sort of bullishness to come from this area. We did fail, right? We failed to go take the high, so this is going to be a state of range. most likely from like this candle there. And a lot of people would mark out this one. Okay, that's fine. I would say that it's probably most likely between this candle, the valid high up here, just because that's what this tapped into. So I'd probably say it's between these. And trade right back up, trade right back down to the bottom, trade right back up. So either works, right? If you use this one, you were a little bit more aggressive. You got a lot more trades, right? Bing, 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 bing. I don't even know how many trades you could have made in there. Probably, shoot. Let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Probably 11, just between that. I mean, that's fine by me. What's the distance? 10 points? Yeah, that's fine by me. It's fine by me. So again, what do we have here? What do we have here? This was the high we're looking to close. Did we close it? No. So now what are we going to expect? We're going to expect it to trade back down to the bottom of the range. Right back down. It's taking something out. It's taking something out. Possibly if you got a valid low, you would expect it to trade back in. It took something out again. Again, what did I talk about a little bit earlier? I talked about even if we decide to range here and drop back down into this about 50% of this previous area, doesn't have to be exactly. It might even be the 30. Sorry, that's a different fib for a different reason. Somewhere around in there, because of the imbalance, same thing we had down here, we would still expect price to go higher. Why? Again, it all comes back to what is overall structure. Overall structure is still bullish. Overall structure is still bullish. Overall structure is still bullish. Looks like you just got a valid low right there. Looks like you just got a valid low right there. So now what is the job of this valid low? That's what we always have to be asking ourselves. What is the job of this valid low? The job of this valid low is to do what? Put in a new high. Come run the top of the range. So if I'm trading from here, if I'm looking for an entry in this box, all I needed to do is tap back in. Boom, there you go. Taps right back in. Now let's see what happens. It trades all the way back up to the top of the dang range. The top of the range. And then what happened? We failed to put in a new high. So what's it do? It trades back to the bottom of the range, which it had now shifted to where? Had now shifted back to this candle. It shifted back to this down at the origin. Remember, it's always at the origin. So there's always ranges within ranges. So then it trades right back up to the top. Where's the top of the range now? Because we formed a new one. Boom. With an overall expectation of what? That we still run and close above this high. And there you go. Get a run and close above that high. So what does this mean? This means that I would assume that this zone is as good as gone. I would assume that this is going to get smoked relatively quickly. There you go. Gets smoked relatively quickly. Closes above. So what does that mean at that point, since we closed above? The actual candle, that's the high. It's not the manipulation candle. It's this candle right here. Once we close that high right there, agree, don't agree. Once we close that high right there, we're now officially bullish, and we're still bullish, but we have new structure, which has occurred here. So now we have a new zone. Let me clean some of this up. Don't need these. I'll just use this blue one. We have a new zone from there to there, which means where's our 30%? Our 30% is somewhere down there. So that means we would not be surprised if price decided to trade down near that area. Now, I see something significant. I see this, I call it tweezers. A lot of the times, this is what gets tapped. A lot of times in these larger zones, this is what gets tapped. And do your own back testing so you can go see. We put in a valid high, traded right back into the zone. Again, we're still expecting continuation. Boom, there's your continuation. So we have new structure here, there, and there. Let's see, did we get a valid high here? We did. So now we have a new structure here. And there's no valid low that's occurred. I actually saw someone talking about this yesterday. There's no valid low that occurred here. So we have a high. We have a low, we have a high. We validated that high here. So this was the candle that we were trying to validate. Okay? But we got a closure underneath that candle there. So this is the new candle we're trying to validate. Okay? It's a new candle we're trying to validate. And it never happens. It never happens. It never happens. And some might say, well, Peck, did this not close over this candle? It did. It did. But you're going to say, well, so why do we not have another swing? The reason we don't have another swing is because to have a swing, we have to have what? We have to have a high and a low. And if there's no low established, you can't establish a swing. Okay? So you still have a high right there. You still have a high right there. Once that moves over, the new validated high comes here. So that's all that becomes. It doesn't matter that you validated a high. If a low never gets validated, you're going to start using from that candle there, because we don't have the last point that we technically have because of swings is this one. It's this one. Yes, we have a valid high here, but since a low never occurs before this gets closed above, we have to move over. Again, back test it. It'll help tremendously. Boom. Okay, we get a shift in structure, did we? No, not yet. Hasn't closed officially yet. Has not. There's no valid low. Still no valid low. So we have a valid high, but no valid low because we need to close this large bearish candle. It's wicking it. Looks like it wants to go back down. We did shift structure here. We did shift structure right there. And we validated a low. Okay, so now that's a high, that's a low. We have a swing here. We have prominent liquidity right here. So I wouldn't be surprised if that gets taken before the zone gets taken. I mean, before we go back down. I'm not sure if it quite took it. I think it got close. I'm not sure if it quite took it there. Let's draw an actual line. Didn't quite get there, but it validated high. So again, we're expecting bearishness because now we're in bearish structure. We're actually in bearish structure here. And we have a continuation. Yes, we have a continuation of bearish structure. So where's our new high? Our new high occurs here. Again, we have a high right here, right before prominent liquidity. So again, you can't be surprised if these get wicked out up there. Valid low, so it's trading back into our previous zone, which already was in right here. This was our previous zone. Takes it. I don't think it has closed. Nope, did not close there yet. It did not close to technically shift structure bullish. It technically has not done that yet. It's on the same. It closed at it. So if you get a valid high, then you can expect the lows to get ran. Why? Because continuation, continuation, continuation. You're always expecting continuation. All right, so there's our valid high occurs. Boom. So what are we expecting? We're expecting this to get ran out. We're expecting that to get ran out. Looks like a little state of range. I'm still expecting the low to get ran out. Why? The same thing we talked about over here. Because we are bearish, and this is actual structure. This is actually here. I don't know why this is here. Actual structure, we are expecting this to continue lower. We're expecting this to continue lower. We have a point here. We're expecting it to always go in direction of trend until proven otherwise. And there you go. Your lows get smoked. It's tapped into that candle there, which is really where I'm expecting this to start turning around. We do have a failure here to close below this low. Okay, so this high is not protected yet. This high right here is not protected yet. So we need to close below this. That's a failure. If this puts in a valid low, I would expect it to trade at least up into this candle. Why this candle? Well, because if we look at the state of the range inside of this zone, it is ranging on a trend, on a downtrend. And I'm going to expect that to continue. Okay, I'm going to expect that to continue. Okay, right into it. And there's a valid high has occurred, so I'm expecting these lows to get smoked. Boom, there you go. Nice. So now we do have a protected high up here. Let me clean some of this up. We're almost at the end of the day. That's crazy, kind of fast. We have a protected high now here. Why? Because now we have officially closed below, and it's always the highest valid high is the protected one. Again, we're just trading back into this larger time frame zone. Just trading back into this larger time frame zone. So this should be an area we should expect bullishness to start to occur. Well, there you go. Get a valid low. Again, internal structure is still saying bearish, right? On the internal stuff, not the blue markings, but on this red line, it's still showing this occurring. So we would expect it to at least trade up into this, at least 50% here. 50% if you're one that goes 1-to-1. There you go, 1-to-1. And it looks like here that, again, our expectation should be what? Continuation. Okay? Remember, our expectation should be continuation because we still have the 30% down here. Unless what occurs? A valid low occurs. Unless a valid low occurs. And a valid low occurs right there at market open. I would expect this to just go ahead and run these highs out. Let's see. And that is what occurred. All right, guys. Well, I hope you enjoyed it. That was Friday, May 3rd, NFP day. It's really as simple as just tracking your last valid structure. When you don't have valid structure to play off of, you just play the inside order flow. And always remember your price expectations. See you guys on the next one.